All right. Hi, everybody. We are on a Zoom call today with Crystal Schultz, my loan officer. How are you doing, Crystal?
Hi. Hi. I'm Crystal with Pinnacle Lending Group, and this is Chili, our mascot, Chihuahua.
What got you into lending? I want to hear your story first.
Okay. I decided to do lending after a long career in nonprofit and fundraising. I really liked helping people, but I saw that there wasn't a lot of room or capacity for change, even helping people one on one. And so I thought about getting into real estate, and lending just happened to be there. And I took more interest in it. I think some math background and more like qualifications for these programs I was already working with. It sort of seemed to be a good fit, and I've been a lender for almost 4 years now, and I love it so much. I have so much gratitude for my clients and the ability to help them become homeowners, even when other people tell them no. We can usually find a way to say yes, and it's a good way to make a really big impact on somebody's life.
Awesome.
Yeah.
Yeah, I mean, certainly when I got into real estate, it's the same thing. I just love being able to help people, and so that's awesome. By the way, I also brought Biscuit so we can have our dogs here. I can't quite hold him in the picture the whole time because he's a little bit nervous. But you'll probably hear him making snorting noises throughout the video.
So cute.
Okay, so I just wanted to talk to Crystal today to kind of dive deeper into the mortgage world and also just kind of what's going on in today's economy. Obviously, it's extremely uncertain, stuff's changing all the time, and I wanted to just get her perspective since she's the pro. So I want to know how has COVID-19 affected work at your office? Are you taking any precautions when dealing with people? I see you're at your office right now. Do people come
Right.
in and talk to you, or is it mostly virtual?
So it's virtual with clients. We are not inviting people over to the office for, one-on-one meetings. We're doing a lot of Zoom, FaceTime, email correspondence, which originally we were already doing a lot of anyhow. So that wasn't a huge challenge, but we've decreased our on-site staff significantly. High-risk people or people who just don't want to be here are allowed to work from home, which is great. My company equipped everybody with an at-home setup who wanted one. I did have a little bit of an issue with being at home working because I'm really big into consumer privacy. And so when I have something to do with files, I like to be in front, in my computer in the office. But if I needed to, I could work from home. I'm literally in about 2,000 square feet by myself in a hallway alone. And I come into contact with so few people that for me, it's sort of like going from, my hallway down to my bathroom because there's no one I come into contact with by coming to the office. So I would say, we've been asked to take like special precautions, stay home if we don't feel good, all those types of things. But it's definitely having an impact, and not just within our office, but within our partners and vendors' offices too. People staying home, not being so on top of their computers and emails is definitely maybe contributing to some slowdown and getting things back, getting documents turned around and things like that. Or, we're all feeling it, but there's other stuff too that's been a result of this. But I would say as far as office operations, we've had to make some changes.
Yeah.
Yeah.
So, like, would you say that things have slowed down a little bit, or?
Yeah, I'm not sure about necessarily like an application slowdown. I would say there's been a change, a shift. We've had a lot of people put their search on pause, but a lot of people also coming back. Maybe people who were on the fence before. I've had a lot of people asking me if they can still continue their search if they're being paid while furloughed or laid off. If they're being compensated, if they can continue their search, or maybe somebody who's been on the fence is thinking now's the time to buy. So it's been a little bit of a shift. We've also had some people who were buying decide that they're going to pause. And whichever decision's right for that individual or family is what we'd like to support. But there's been quite a shift. I've had some calls for cash out refis, some debt consolidation, things like that, which, rates are still at record lows. Even though they're not rock bottom, they're still really low. So people could be refinancing to save money or get cash back, or, buying is still just super low interest rates, and it's still an opportunity out there.
Are mortgage rates affected at all by what's going on with the economy?
So,
Or is it totally separate?
like, mortgage rates have a ton of contributing factors. A lot of people felt that when the Fed rate dropped to zero, that was the time to call in and refinance. However, the problem with that is all of the super low interest rates were pretty much gone by that time. We had sort of a surge where, like, rock bottom rates, where we were all selling refis. People were getting into purchases super low, glorious rates in the high twos, low threes. And it got to a point where the lenders became backlogged, backjammed. They ran out of money and capacity, and they couldn't lend anymore. So from a retail perspective, they increased their rates. They had no money and no capacity to lend. And then the Fed dropped the rate to zero and infused money, but it just wasn't enough. And now, after all the infusions, we're starting to see some of the rates drop down a little bit. We're still not seeing the rates be at the level where they were, or even just previous to that, because of the fluctuation in the market. It's so much happening right now with just the economy and rates repricing during the day, which you don't see that often. Like, literally, sometimes you won't even see a reprice within a week. But there's been days, not this last Thursday, but the Thursday before, there were 5 intraday price changes. And that's just truly, that's a very volatile market that we're not used to it right now. So it's interesting. Good. I would say that this will likely drive rates up. Overall, rates will probably be a little higher.
Right. Yeah, I know certainly on my side, I've had a very mixed response from clients as well. Certainly a lot of people that were thinking about buying are like, oh, I'm going to wait until this passes over. And then there are some people that are, like you said, being pushed over the fence. So yeah, it's very, very uncertain in terms of people even wanting to buy right now too. So
yeah, the good thing is the inventory has gone up, so there's more available.
mm-hmm.
So if you were somebody on the fence looking to buy, now might not be a horrible time.
Right. Yeah. If rates are going to go up like you think they will.
They should, to compensate for a couple of factors, like in the economy. Not substantially, but housing prices will dip a little bit just from all of this, and then rates will probably increase a little just to compensate for that.
So the FHFA announced the forbearance program, and I was just wondering if you can kind of explain that a little bit as well.
So basically, you have to call your lender, and that's who you're paying your mortgage to, your servicer, and let them know that you're experiencing hardships because of COVID-19. A lot of them have it right on their website when you hop in to pay your mortgage. Even if you're not planning to register for it, the little questionnaire pops up. Are you experiencing hardships due to COVID-19? And you click yes, and they say, would you like to defer or go into forbearance or whatever? And there's differences in all of those things. I think right now a lot of the lenders are offering, you don't have to pay in this 90 days and we'll figure it out later. They're not necessarily saying that, oh, you're going to owe interest back on this. It's not all going to be due at 90 days, because there's a lot of federal laws like overlaying those types of things. So right now, I think a lot of lenders are jumping on board and just saying, hey, let's help everybody get through the next 3 months. And then we'll look at what we're going to do next, whether it be like a loan modification or a payback or, a payment plan. However it may be, this is just uncharted waters for everybody. But with the new announcement, everyone's required to kind of jump on board. This doesn't include loans that are not backed by Fannie and Freddie. So the non-QM lenders with those, self-employed business owners loans, bank statement loans, things like that, they might not have that opportunity.
Right. And you said when experiencing hardships, what is the definition of that?
So, they're saying for people who have lost their jobs, lost their stream of income, people who are unable to pay due to that, not people who are maybe like, oh, like, let me jump on this, because it's not going to be money that you just get. It's not 3 months worth of free mortgage. It's money that's going to be paid back. So if you're in a position where you're able to pay your mortgage, you have a job that's just not been affected by COVID, my advice would be to just stay current with your mortgage, because when you go to do something else, even though we're not doing credit reporting negatively right now, any type of refinance, we're going to want to see 12 on-time mortgage payments. So let's say 6-7 months from now, the rates are low, which there's a chance there's a dip, and you want to refinance, but you went into forbearance. We're not going to have that 12 months of payment history, and that's still going to be required. So we need to see that you're consistent, and those rules are still going to be there. So there's not going to be like a credit ding, but there are implications for the future. But by all means, if you are experiencing hardships, you should take advantage of it, because these are put into place to make life, tolerable during this time.
Right. So now I'm curious, if all these people are applying for this forbearance program, what do you predict will happen to the mortgage world, and with FHFA, now receiving money for 3 months? How will that affect things?
I do foresee just massive bailouts and inflation then after that. But
Yeah.
but yeah, I mean, this is sort of what pandemic will lead to. We haven't had it in a long time, but other countries have, and hopefully we can learn from it, and businesses take care of people like it seems like they're trying to. I've gotten emails from the place I lease my car from, just offering, if you need to skip your payments, just call us and let us know. Like, everyone reaching out, anyone I've ever had monetary transactions with, sending emails saying this is how you don't pay. So I feel like a lot of businesses are stepping up and helping. I just think that once we get back, it's going to be really tough to just like hit the ground running again and recuperate financially.
Right. So for those who are still working, and they are still getting paid, and they are looking for a home, what exactly is the qualification process for them right now?
Okay, yeah. So for me, this hasn't changed, but for a lot of lenders out there, I just want to really quick debunk a myth. A lot of lenders are out there posting right now that the credit score requirements have gone up. That is not true. There are no minimum credit scores on VA. There are no minimum, 680, 640 credit scores for FHA. That is not true. That is their banks overlaying that. So don't be discouraged by what you're seeing posted out there about credit scores going up, DTIs going down. That's not across the board. That's certain companies pulling in the strings. And we as a broker have the opportunity to lend to multiple sources. So our pre-qualification process remains the same. We just go ahead and take a credit report. You can fill out my online app to get that done. And then we take a peek at 2 pay stubs, 2 years taxes or W-2s, and 2 months bank statements. So we're going to want to see that they have, money saved up for a down payment, or if they qualify for any programs, like that they're going to have the funds to close. And we're going to want to see their job history for 2 years, and obviously rental history, but that's all just super easy, quick online application, 6, 7, 8 documents that you can easily get via email or, even text pictures, but it's super easy, super quick process. We're all still working, every day. I know me and all my colleagues are all on the clock daily, checking in, seeing if we can help people, because, we know it's going to be possibly a little bit of a slowdown, and when people are looking that they want to act fast. So we're here and ready for anyone looking to buy. But yeah.
All right. Awesome. Well, thank you for all of this information. I really appreciate your time. Chili looks quite comfortable over there too.
He is. He's so happy. He misses the days at the office. Now we're only coming in every so often and limited times, and he doesn't get to see all of his friends here anymore.
All right. Well, thank you so much, Crystal.
Okay. Thank you. Take care. Let us know if you need anything. Bye.
All right, you guys, thank you so much for joining me today with Crystal Scholes with Pinnacle Lending Group. And I hope that you guys learned a lot of stuff. I'm sure that the news will continue to change as we go through the pandemic, but I'm going to keep making videos like this with my business associates to keep you guys updated on what's going on in the real estate world and in life in general. So if there's anything you guys want to listen to or anyone you want me to talk to, please shoot me a message. And yeah, hope you guys have a good weekend.